Alright, what is going on, everybody? Hope you guys are having the best day of your entire life. In this video, I'm going to break down how I made $10,144 in literally just one day of trading. And I took 4 trades. One was Tesla. I took 3 trades on Tesla. And the second trade, or the second name that I traded, or the second stock that I traded was Meta. Now, Tesla was 20%, 50%, 50%. 3 trades that I did. Fucking insane, yeah. And on Meta, I took 1 trade, which is 40%, and that was it. Now let's break down these trades and let me give you the sauce how I made $10,000 so you can do the same as well. Now you want to stick till the end because you don't want to be like, oh, I got the sauce within first 3 minutes. I don't need to watch the whole video. Yes, you do. You're broke. You don't have, bro. If you do dramas while you're broke, man, what the heck? Like, what are you on? Like, what you been smoking? What are you doing? When you have money, you get to do some dramas. When you don't have money, man, shut the fuck up and take everything in. That's how things work. Because you don't know what's gonna help. You don't know what's gonna change your life. And who are you to judge? Because your current... Here's the thing. Your old previous, like, I'll keep it real, right? Whatever you did in the past got you where you are right now. Right? That means this is your brain. This is where it got you. And now you're not watching the stuff that I'm putting out there because you're like, yeah, you already know. You're thinking with this brain. You know where this brain gonna take you? This brain's gonna take you there always, which is no money. So, bro, open your brain, say that you have no idea what you're doing, and be receptive of things. It's just me, all right? Anyway, if you don't want to do it, bro, you're comfortable staying broke, you can stay broke. I don't care. All right. But for the 1% of people that can actually watch this stuff and actually start making money, I make these videos for them. So if you're the 1%, make sure let me know in the comments down below. Say 1%. All right, let's freaking do this. Now, I want to break down, before I even move forward, I want to break down the time frames that I use. So I'm sure if you've been already watching my YouTube videos, you already know the time frames that I use. But if this is the first time you're watching my YouTube videos, so it's important. Now, the first step towards my trading system is time frames. Now, a lot of people watch the same time frames whole day. Like, they watch the same 1-minute chart or 5-minute chart whole day. I don't do that. The reason why, more the candles you get, more confusion you get. So I'll say one more time. More candles, more confusions. All right, why? It just doesn't work. Just doesn't work how we think. If we have more choice, it'll be easier for us to make a decision. In reality, more choice, it's so much harder to make a decision. I'm from India, bro. The part of the world where I come from, we don't have enough choice. This is the only things you get, and you're like, oh, out of 3, I'll choose this. But when I came to Western country, and I was like, man, I have 3,000 choices. And it took me 10 times longer to make a decision, or even 100 times longer to make a decision. Here, I made a decision in 1 minute. Here, it took me bloody 2 hours. Why? Because the choice. Now, I wasted the rest of the stuff. I wasted the rest of the time. So, more information you have, more choice you have, more confusion you're going to be. All right, so the number one thing that I want to break down is time frames. All right, so I use 2-minute chart. Okay, I use 2-minute chart, 5-minute chart, and 10-minute chart. So 2-minute chart I use as soon as the market opens. So from 9:30 Eastern time to 10 o'clock Eastern time, I use 2-minute chart for first 30 minutes of the day. All right, and now please don't be extra smart and comment down below and be like, hey man, I'm on the Pacific time. What time would my be for the 2-minute chart? And I always read that. I'm like, man, you're the smart motherfucker in there. Because I said, first 30 minutes of the market open. So what time does the market open? So first 30 minutes. And I get, oh my God, I get so many people ask me that. Hey man, I'm in Singapore. What would my time be? What do you think I am? Google? Go find out on Google, right? And then 2-minute chart, 9:30 to 10. Then I watch 5-minute chart from 10 o'clock to 11 a.m. Eastern time for 1 hour. Okay. Then I watch 10-minute chart from 11 Eastern time to 3 p.m. Eastern time. And that's about it. Now, you might be like, but bro, what about 3 p.m. to 4 p.m.? 3 p.m. to 4 p.m. is the smart money hour, the power hour. That's not for you and me, is it? Like, bro, it's so volatile in the power hour. It's Power hours means the smart money is about to close the market, yet they are moving big numbers, and that's why the volume towards the end of the day is always nuts, because they are moving the money, big money, and you don't want to get caught, because there's a lot of manipulation that starts happening in my personal experience, especially with my strategies. A lot of manipulation start happening around 3 p.m. to 4 p.m. Now, if your strategies work, cool, I'm not shitting on it, but my strategies don't work, so I don't trade 3 to 4 p.m. I think nobody's strategies can work around that time, because do you think smart money is using an EMA to get in and get out? No, they are just doing it because they want to get in. They're just doing it because they want to get out, because of the fundamental reasons, technical reasons, which is bigger than the 5-minute chart or 2-minute chart that you might be trading on. All right. So this is it. These are time frames. You can take a screenshot of this. All right, it will change your life. So take a screenshot so I can do a fancy face. All right. All right, this is the time frames. Let's move towards the second topic that I want to talk. Now, before I talk about the trades, I want to break down a few things. Okay, the first thing was time frames, which we did. The second thing I want to break down is confluences. Now, what's confluences? Because as soon as I start explaining my trades, this stuff will start making sense. So, what's confluences? Confluence, if you want to know the actual definition, confluence means when there is more than one reason for you to jump into a trade. Now, what does that mean?
It's 10 o'clock.
What does that mean? What does that even mean when there's more than one reason to jump into a trade? That means if there's an EMA there and there's a critical level there, there's an EMA, price is roughly, this is where the price is, and it's coming down. And we're like, oh my god, it can be a break and a retest of a level. And also there's an EMA. That means people who trading the EMA bounces, they are jumping in. People who are trading the break and retest of a critical level, they are jumping in. And for some reason, let's say there's also a Fibonacci level sitting there, and you're like, oh, people who trade the Fibonacci, they're jumping in. Now that this area becomes a confluence. Why? Because a lot of different sort of buyers are going to jump in there. And what happens when everyone's jumping in? Big demand happens. What happens when there's a big demand? Prices skyrocket, right? Remember when there was a big demand of toilet paper 2020? What happened? Toilet paper prices skyrocketed, right? Same thing. When there's a lot of demand in the same critical area, prices skyrocket. And that's what confluence is. It works for the either way. And all these concepts that I explained, man, somehow people actually ask me, how would it work for the downside? I understand you might be fresh. You might be just starting out, man, but that doesn't mean you can't use common sense. Same concepts work for the downside as well. There's a lot of people who are selling at that critical level. If there's a critical level like this, that means a lot of people are selling. So you can go short or buy puts and make money towards the downside. And yes, I was surprised. A couple of days ago, I found out that still people do not know that you can make money when the market goes down. Yes, you can make money when the market goes down. That's called buying puts, buying puts on options. They're called shorting the stock. All right. I had no idea. Anyway, that's called confluences. We will talk about this as we move forward. The third point that I want to talk about is called Fibonacci's. What's Fibonacci's? Fibonacci's is a mathematical numbers explaining when something pushes. There's chances depending on how much momentum it's pushing on, there's chances it might pull back. And what number it pulls back to can be the Fibonacci's, and it can push towards the upside again. So Fibonacci's usually are like here. You go here, and it says Fibonacci retracement. You place it from the bottom of the trend where it started to where the pullback is. Let's say we are not seeing this is like we can't see this yet. You place it from here to here. You get two numbers, 0.236. I'll show you as well. 0.382. I'll show you my settings. These numbers are the important numbers. All right, now let me draw this, and then I'll say if the trend is strong, if this is the trend, super strong, okay, the strongest of all strong trends will bounce at this 0.236 level. It will bounce here. That means the strongest will bounce here. The strong will bounce here. These are strong. Anything this is too weak. Anything this, my grandmother can walk faster. I don't like it. And this is reversal. All right. I only want to trade this and this. Man, I'm an options trader. I want quick move. I don't want to play around too much, man. 0.236 and 0.382. These are the only levels. And now take a screenshot of these settings. Might be life changing for you. These are the settings. Take a screenshot. Now I'm about to put it away. Done. 3, 2, 1, done. All right. Now, this Fibonacci is clear. And now we move forward and let's break down the trade that I took on Meta first, and then I'll break down the Tesla trade, all right? Now, Tesla trade was taken on a 2-minute chart before 10 o'clock. So what I'll do is I'll kind of go back like this. The trend already picked up. Look at this. The trend already picked up. Yeah. Look at this trend. It's already a downtrend. You never want to trade the chop. Trading chop and making little money, man, is not gonna pay the bills. You wanna make big money. That should be your goal. You don't want to make little money and be like, oh, let me see what I can do. Little money is not how you pay bills. Big money is how you pay bills. So aim for the big money. That should be your goal. All right, that's always my goal. I want to make big money, man. I don't want to play around. In the chop, you make 5%, 2%, 3%, 5%, 10%. Man, how the heck am I gonna pay bills with that? I'd rather not trade. I want to catch a 40, 50% move. If not, goodbye. I'm out of here. That's my theory. So how does a downtrend or uptrend starts when the stock starts going like this? What is this? This is highs. This is lower highs compared to the previous one. This is another lower highs. This is another lower highs. What is this? Lows. This is a lower low, and lower low. So what is happening here? Look at this. Is it the same concept? Look at this. What's happening? Highs, lower highs, and that's forming right now. And up until we see a little bounce, we can't confirm that this is a lows, or maybe the lows can be here. So, think about it. It bounced here. That's why we know that this is the lower lows. Where is going to be the lower lows here? It can be here. It can be here. It can be there. It can be there. Only way to find out is wait for one little bounce. The moment it starts bouncing a little bit, we are like, okay, this is a lows, this is down this lows, and it can be this, like this. So wait, all right. We're still waiting. I'm still waiting. I'm still chilling. And this is a trade that I took. I'm still chilling. I'm like, no problem. I'll wait. What's a rush, right? And then I saw this. Now I'll explain why I took the trade on this particular candle. I'll break this down for you. 200 moving average. Okay, 200 simple moving average. 200 simple moving average. All right. Now how to add this on your charts? Because I freaking love you. I'll show you how to add this on your charts. You go to this indicator tab right there at the top. Okay. You search moving average. All right. You find this moving average simple. You click on it. Then you go and it will be a blue line on your charts. You double click. You change the length. You actually go to visibility first. Make sure everything's on. Style. You can change the color if you want. Inputs. You want to make sure this is close. Okay. Make sure this is all like the same, exactly like this. You change it to 200. And moment you press OK, it's gonna look like this dotted line, or it's gonna be a blue line, of course, but you can change the settings to dotted line. Anyway, this is 200 moving average right here. Now 200 moving average is a very, very critical level, very critical line. Like you can go and check on any time frame. You can go on a 13-minute for fuck's sake. I don't care. Like I don't watch 30-minute, of course, but any time frame, 200 moving average is very strong support level or very strong resistance level. All right, it's just super strong. All right, now we broke below the 200, sweet, but I was about to switch the time frame. 10 o'clock. I said at 10 o'clock I watch 5-minute charts. So at the same time I was also watching Meta chart on a 5-minute. Look at this. I was watching Meta chart on a 5-minute at the same time, right here. And around this time, 9:50, somewhere around there, it broke the 200 moving average on the 5-minute. And 5-minute 200 moving average is like the king. Write this down. Hey, by the way, man, why are you sitting on a couch and watching this video? Go sit down with a pen and paper, man. What do you think? I'm a Breaking Bad Walter White trying to explain how to actually do some chemical reaction and make a blue ice? No. Bro, go grab a pen and paper, sit down, pause the video, sit down, and man, I don't know. Anyway, everybody's different. Everybody's different. I gotta learn. All right. This is Meta. It broke below this 200 moving average on a 5 minute. It went back and retested the 200 simple moving average on a 5 minute chart. 200 simple moving average on a 5 minute chart is one of the most critical levels you'll ever come across. And I'm like, okay, it's getting retested. Maybe there are chances that it might gonna retest this and go down. As a lot of critical levels usually are. They break and they get retested. So I was like, sweet, let me see how it's like what's gonna happen, right? And the moment I retested this 515.75, roughly around this 515.75 ish right here, and it got rejected right here. The moment it broke below 515.35 ish, the moment it's able to, this 2 minute candle is able to close below that. You see this? This is where roughly the 200 moving average on the 5 was. It was able to close below that, and I'm like, yo, did I find a gold mine? It could be a gold mine because it can see a quick rejection. And also the volume on the green candle is comparatively low. That means the buyers are not actually there. Sweet. Now, I jumped in my puts here. All right, I jumped in my puts here. And this is what happened. One quick move. Look at this. One quick move. And this might look like a little move, bro. This move went from 515.25 down to this 514. That's it. Over $1 move. You see what I'm saying? That's over $1 move already. Within, what? 2 minutes. So the whole point that I want to break down here is these are quick trades, yo. These are quick moves. You see what I'm saying? And I'm in the trade. I'm like, oh my God, let's take some profits because it just hit my yellow line, right? We took a little bit off and then this happened. It went all the way quickly down. And this is 10 o'clock. I'm about to switch the time. As soon as 10 o'clock hits, I switch the time frame to 5 minute. I switched the time frame to 5 minute. It hit, like, it made such a huge move. And bro, this is like, what is it? $2.50 move down, $3 move down. We were up like 40-50%. And this is Friday, 0 days to expiration. And I'm like, oh my God. This is absolutely nuts. Let me take some off. Now, which is the third point I want to break down, or fourth point after Fibonacci's. I want to break down, which is called negative risk management. Negative risk management means a lot of people know about risk management. And people also say, bro, nobody goes broke taking profits. Let me tell you something today. Nobody gets rich taking small profits. Nobody gets rich taking small profits. I'm sure you guys have heard stories about people you have heard story about this guy who bought 2 pizzas with 10,000 bitcoins. What happened? He sold at a profit. But did he get rich? No, nobody gets rich taking it. Go, if you don't know what I'm talking about, go Google. The dude who bought 2 pizzas with 10,000 bitcoin back in the day. He thought he was winning. He took small profits. And did he get rich? No. Think about it. The 2 pieces costed him what? Fucking hundreds of millions of dollars, right? Or at least 50, 60, whatever million. Anyway, nuts amount of money, crazy amount of money. Now, that's why you need to let your runners run. Now, that's where the negative risk management comes, okay? So negative risk management means, let's say if you are jumping into a trade here with 10 contracts and these contracts are sitting at, probably we can say $1 each, all right? $1 each, that means they're $100 a contract. Sweet, you jumped in 10. The moment it hits your yellow line right here, okay, the moment it hits your next level, and if you want to ask me how do you make these yellow lines, where do these yellow lines come from? These are hourly levels. And which option contract to choose, all this, everything else, man, if you want to learn more from me, towards the end of the video or under the description box below, it has a link to join my, or apply for my university to learn from me one-on-one. Or no one-on-one if as a group setting. You can learn from me and you can get to the next level. And it's a 6-month thing. So I can't let you just go out there and within a month and be like, hey, go out there. No, it's a 6-month thing. You can come learn from me. Anyway, if not, enjoy these videos as well. All right, 10 contracts, $100 each. And the moment it hits my next yellow line right here, I am going to take 5 off. So let's say the moment it hits these contracts are sitting at 140. That means I took 5 contracts off at $40 a profit. That means 5 times 40. What is it? 200. That means $200 is in my pocket now. That 200 is not leaving. This is staying. What a lot of people do is they will let a winning trade go against them, and now a winning trade which looked like 200 green trade, it will turn into a big red trade. and that a lot of people do. I'm sure you have done it. Yeah, a lot of people do. So I don't blame you. So the moment you take your first profit taking, right? These contracts are sitting at 1.4 now. The moment you take your first profit taking and you're still holding 5, you're gonna make a stop loss of the remainder, the 5 contracts. You're gonna make a stop loss of the remainder sitting at break even. Your stop loss of the remainder of the contract should automatically go to break even, just in case if it goes against you. All right. Now the moment it goes against you, hey, the moment it hits break even, so this 200 stays in the pocket. Like Nipsey Hussle says, all money in, no money out. That should be your goal. All right. Now it made a huge move down. I got out another few contracts. Let's say I got another 3 contracts right here, and probably at 250, 220 or whatever. Right. I got another few. Now I took profits on the 3 contracts at $120 a contract, which is, you see, I'm printing money at this stage, and the rest, the moment it bounced, I got out because my break-even stop loss got triggered. Right? That's how you trade with the negative risk management, where you keep taking profits, but the stop loss of the runners is always break-even. That means just in case if it bounces, your stop loss gets triggered on the option price break-even. Sweet, negative risk management. Hey, I'm giving away too much sauce, and I feel, oh my god, I feel sick. All right, I'm giving away too much sauce, so make sure you're writing this stuff down. All right. Now this was MetaTrade, and pretty much this is it. And then we saw a little more bounce, and I actually got out from the moment I hit my break even. But that was it. Now let's talk about the trade that I took on Tesla. Okay. Now there's one thing that I want to tell you. All right. All these stocks that you see, SPY, QQQs, Apple, AMD, Amazon, Meta, Microsoft, Nvidia, Tesla. These are the only names that I trade every day. I don't trade anything else. I don't trade SMCI, Netflix, Google. I don't trade. These are the only names. Now, stocks are, or stocks should be like your like a wife, right? Stocks are like your wife. You know how they react to different things. You know what are the things they don't like. You know what are the things they like. If you're married, of course. I know what Apple likes. I know what Apple do not like. I know how it reacts to certain news. I know how it reacts to certain levels. I know if somebody pushes the buttons on my wife, if somebody like trying to trigger her, I know what's gonna trigger her. Same thing with the stocks. I know what's gonna trigger. Now, when something is moving, let's say GME, GameStop is moving, you're like, oh my god, let me trade this. You know what? I have a theory, man. These stocks are my wife's, right? Yeah, of course. You can say, oh my god, somebody else's wife is fucking hotter than your wife, or whatever crap that you want to tell yourself. Bro, whatever. Just keep your money only for these stocks that I have a habit of saying that everything else is a distraction that is going to ruin your marriage. All right, everything outside of your marriage, it's a distraction. Yeah, GME might be making a nice move, and you might be like, "Oh my god, man, my stocks are move like shit." Nah, that one's better, bro. You're gonna ruin your trading account just for one night fucking stand or one time trade. You see what I'm saying? If you like this analogy, let me know in the comments down below. You see what I'm saying? Hey, I can really break. I don't know. Now I'm thinking about it. I can really break down the topics, really easily for everybody. It's a secret talent. You know what I mean? It's a secret talent. Yeah. All right. Anyway. So Tesla. Once you know, and also every day, stocks, or you can say a wife, has a mood. There's some sort of mood always. There's something always there. Something always freaking. I've been married 4 years, and I can tell. Every day there's a mood. Sometimes super happy, and sometimes not very happy, and sometimes up and down, right? Or sometimes emotion. Sometimes this, that, crap, all the stuff. We guys, we are pretty much like this. Whatever, we don't care. But that's how that's how it works. But anyway, that means some days it's gonna be choppy. Some days it's gonna be up and down like a seesaw. It makes a huge move up, then a huge move down. And some days it's just like confused. It itself doesn't know what it's doing. And some days it's gonna be like trendy, either up or down, whatever. It's gonna be trendy. And once you figure out what mood the stock is in, you wanna take the best out of it. All right, you want to take the best out of it. And that was the case with Tesla as well. I figured out with the first trade that I took on Tesla that it is in a decent freaking mood on the day. I was like, okay, this is a decent mood. Let me get the best out of it. Right. Right, why not? So I was trading on a 2 minute chart, of course, because it was before 10 o'clock. And as I said, how does the trend works? You always want to see a little pullback. This is a decent trend already started, right? And only the Fibonacci's, by the way, I forgot to tell you, the Fibonacci's only work from the from the current market opens high. So you can't calculate the pre-market levels in it. Okay, so the market opened 9:30. That means Fibonacci is only gonna work from 9:30 to the market opens. Okay, the low. Now I'm like, okay, let me see. Wait for a pullback. I'm still waiting for a pullback, and I still haven't got a pullback. Look at this huge move down. Still waiting. I'm still waiting. I'm like, all right, whatever. Still waiting. And oh my god, still waiting. And then I got a pullback. Look at that. So nice, right? So what did I do? I went to the Fibonacci right here on the side. I grabbed the Fibonacci retracement tool, put it at the highs, put it on the lows, and just so these numbers can be drawn 0.236, 0.382, 0.5. I waited for this particular candle to close. The moment it closed, and I'm like, oh my god, it is able to close below the critical, and if you go out there and try to use this by yourself, man, and you're like, oh my god, bro, you're gonna fuck up. You know why? You know why? Because you're going to rely on this. I don't rely on one thing usually to just jump in. I rely on multiple things to jump into a trade. Okay, there's a lot of bids and ask. What's bids and ask are doing? What's how the stock has been moving on the day. There's so many things that I actually teach in my university that also come into the factor as well. But big concept, got rejected of the Fibonacci, and I'm like, oh my god, let's do this. And I jumped into a trade, and this is how the trade went. The moment it hits my yellow line, what did I say? If I jumped in 10 contracts, I'm going to take 5 off. Raise the stop loss for the remainder 5 at the break even, right? Now, I already know this is a happy stock. Now, it hit the critical level of the day. And now at the critical level, what's going to happen if you go and run straight into a wall? What's going to happen? You're going to get hurt, but also you're going to probably bounce back a little bit. Yeah? This is what happens. I've seen. I had a friend of mine's little kid, probably 2 years old. He came to our house, the previous house that I was in. Now I'm in a new house, so shout out to that. Hey, he was chasing my cat. My cat's sitting next to the wall, sitting right near the wall, and he's running and running and running and running and running and running towards the fucking cat. Bro, cat moves quick. Cat just sat there, looked at him, and then cat jumped to a side, and the kid, I was watching, kid hit the wall, and he bounced back. He hit the wall and he bounced back. I'm like, this friend of mine, he's a trader as well. He's like, what happened? I'm like, he hit the support. I'm like, he hit the support level. That's what happened. Because the moment you hit your support, the moment you hit the resistance level, you are like, bro, just for the respect of these levels that you drew, you got to take some profits. Right. I do not use my levels to get into a trade. Here's the thing. This is where the crazy part is. I don't use these yellow lines to get into a trade. I only use these yellow lines to get out of a trade. I think that's a difference between a losing trader and a winning trader. Winning trader takes profits at these levels, while losing trader gets in a trade with these levels. And that's why they keep losing, because they are getting in where I'm getting out. That's, hey, do I feel bad? No, learn how to trade. All right, the moment it hits the yellow line, I took profits. I'm like, sweet, no problem. The remainder can be break even. And this next, you see this bounce? Next trade on the next candle, it bounced. And I'm like, oh my God, man. All right, sweet. My break even got triggered. No problem, no stress. But already on the day, I know the nature of the stock. The nature of the stock is, it made a nice move. It paid me about 20% really quick. I'm like, sweet. And now, it went down. Then it went up and retested this critical level. So what did that tell me? It bounced off a zone where the buyers were sitting, and it's sitting at a zone where the sellers are sitting. That means right now there can be a tug of war between buyers and sellers. So whosoever pulled harder is going to win. So let's see if the sellers win or buyers win. That's what I was sitting down. And here, right here, is forming a flag. Look at this. 1 bounce and 2 bounce. It's forming a little flag. I'm like, okay, whatever happens, I'll take the trade. Whatever happens, I don't care. Whatever happens, let me know if the buyers win or sellers win. And somebody actually asked me, hey man, who do you support in the election? I'm like, whosoever wins, I'll support them. right? It doesn't matter who you support before. It matters what do they do after they are in the office, bro. You see what I'm saying? You need to give them support after they're in the office. That's me. I wanna bet on the winner. So I'm like, buyers or sellers. I wanna bet on the winner. Whosoever wins, done. And now this is a flag. So what am I gonna do? I'm gonna wait for the flag just in case if it goes towards the downside. That's my trade. Why? Because the nature of the stock is already that the mood is down. So what I'm gonna do? If it breaks the flag, I'm gonna jump into a trade, and bam, it broke the flag. You see what I'm saying? It broke the flag, and I'm sitting in a trade now. I'm in the trade, yo. The moment it hits my next yellow line, I'm gonna take 50% off, and playing around, no problem. Stop loss not triggered yet, and still, where's the stop loss? The stop loss is just above this critical level. Why? Because I got in here. Where's the sellers were coming in before? The sellers were coming in here. That's where it made sense for me to put the stop loss. That means if the prices get above this level completely, I'll jump out, right? And then I did this. Almost went there, and this was a very quick move. Even if I wanted to get out, I couldn't. I stayed in the trade. I'm like, no stress. It went like, prop, done. I'm still in the trade. I'm like, sweet. It looks like shit, but hey, sweet. If it works out, it's going to be a nice freaking trade. You see what I'm saying? And now I'm still in the trade, and it did this. Bang. The moment it hits the next yellow line, I'm going to take. Now, as soon as the 10 o'clock hits, what do? The moment 10 o'clock hits, and this was a little bit lengthy trade, it was a long trade, but what happens when it hits 10 o'clock? You jump on a 5-minute chart. So I went on a 5-minute chart straight away. I'm watching this, I'm like, sweet, this looks really, really good. On a 5-minute, looks like it went and rejecting of this Fibonacci level as well, and actually added a little bit more around there, and this trade is working. Bam! Hey, there's a saying that I always freaking say. It's called patience pays the patient hand that waits patiently to be paid. Write this down, yo. Stocks don't owe you shit the moment you jump into a trade. They don't owe you crap. Okay? It is going to take a while. Whatever. If it is going to take a while, you know your stop loss. It's your stop loss, you jump out. But here, I was like, oh my goodness, this is such an incredible, sexy move. The moment I hit this, I took 50% off. What I'm going to do if it hits this level, I'm going to take another 50% of the remainder off. So let's say if I'm 20 contracts, I took 10 off. I'm going to take 5 off here, and I'm going to take 3 off probably the next one. And I'm doing this. So I'm like still sitting in the trade. Sweet. And look at this, man. What a nice trade. Did the break even got triggered here? No. I'm chilling, yo. I'm chilling. I'm living my life. I'm like enjoying. And now I took one more trade on this because I'm like, this is so nice. Let me see if it pulls back a little bit more. And it started pulling back roughly here. I'm like, this is nice. You know, it's a critical level. Now Fibonacci level is quite further away, yes. But I'm like, you know, because the nature of the stock, bro, this is what people do. They catch a move on one stock and they let that stock go. Or they're like, oh, I made $100, I'm done for the day. Bro, the nature of the stock is clearly telling you there's money to be freaking made. Why walk away? All right, there's probably a quote that I have in my pocket because, all right, hang on, let me have a look. That's a one. When money comes easy, that's when I go hard. When money comes hard, that's when I go easy. Bro, money's coming in easy. What do? I go hard. Right? So, what happens here? I saw this. I'm like, sweet. I already got paid once earlier. Second on a 2-minute chart. Third, when I added a little bit more on this Fibonacci level. Fourth, now, which I'm looking forward for it, and I'm like, sweet, the nature of the stock is already there. This is a critical level. It's meant to bounce, and clearly sellers are like coming in even harder. So sellers were coming in before around the critical levels. Now the buyers came in at the critical level right here. The sellers, look at this wick. This wick was green wick at one time, like a whole green candle. The sellers pushed it down. That means the sellers are there. I'm like, oh, sellers moved down. Sellers, if they keep selling, the stock prices will keep going lower. So I'm like, I saw this and I'm like, sweet, let me see. Keeping it super simple, man. If you keep your trading simple, you're gonna make a lot of money. If you make it complicated, look at how peaceful my trading is. If you make it complicated, you're gonna struggle and you're gonna struggle hard. All right. I drew, you know what I did? I drew my flag here. I'm like, sweet. If it breaks the flag, it's probably gonna be a good trade, right? You're gonna be a really good trade. So what did I do? If it breaks, I'm gonna jump in, and it did. Yo, it did. I know it's absolutely nuts. It's absolutely crazy, but that's how pretty much you meant to make money. You meant to take the trade that you have to take. This is how you make money. And now it hit my level. What did I do? Yo, what did I do? It's over a $2 move. What did I do? On a Friday, I took 50% off. Yes. What's the stop loss for the remainder 50? Break even. We are gonna take rest of the profits, a little bit more profits, the next yellow line. And roughly around here, I think I started taking more off. No, actually, no. I waited for the line to hit, yes. The moment next line hits, what did I do? I took more off. You see what I'm saying? And that's when the stock started bouncing. Look at this. It bounced. It kind of hit my break even. I got out. That's how you meant to make money. With a system, with strategy, with... Man, you're not going to luck your way into thousands of dollars every day. Yeah, you can probably get lucky one day and make money in second day, third day, fourth day. But eventually you're going to lose it if you're getting lucky. The skill set is where you're going to make money. This is the skill set that I'm breaking down for you. So I'm not going to say much. I'm not a YouTuber. I'm not going to tell you to go subscribe to my channel. But it will be nice if you subscribe. It will be nice if you like the video. It tells me that you like watching this stuff. I can make more of this. And it will be nice if you leave a comment telling me if you're actually learning something from these videos, and so I can keep making more. I get it. I never leave a comment on any YouTube videos. Ever. If a creator does a good job, if they do a good job, if I'm watching a video, I'll drop a like. So if you can't comment, if you don't comment because you are like me, drop a like. I'll appreciate that. And go to the and also there should be a link, the first link in the description box below. All right, or probably a link should be right up there. If you want to apply for my university, I'm out. You look after yourself, and I'll see you on the other side. Peace.